Hello, everyone, and welcome to the panel discussion, Carbon as the New Asset Class Emerging on the Blockchain. This panel is hosted by the European Carbon Offset Tokenization Association. In short, it's ECOTA. We are a think tank connecting bright minds like Sandra, Carsten, Michael, and Tim on topics in and around regenerative finance. And we have a special focus on tokenized carbon credits. We want to provide you in the audience with the best possible education about this young and vibrant industry. And at ECOTA, we are passionate about the intersection of sustainability and blockchain technology. We want to use this combination to achieve a net zero future for our planet. The panels, like the one you are looking at right now, panels like these are made possible by our trusted institutional members. So a big thank you to all of our members for supporting this panel. I'm Max, I'm one of the two executive directors of ECOTA, and I'm your moderator for this event. But before we dive into today's topic, let's meet our panelists here. Sandra, let's start with you. What are you working on and why are you passionate about refi and especially tokenized carbon credits?
Perfect, thanks Max. I'm Sandra, I'm the Chief Strategy Officer at Intersec. And the Intersec is a joint venture between the Frankfurt School and Geneo Consulting, and we are a consultancy for the financial industry.
Sorry, that was on my name.
Okay, focusing on the strategic assessment of blockchain use cases as well as the integration of digital assets and blockchain to existing business models and IT infrastructures. And of course, the refi space is also one topic we accompany for the financial institutions to get access, or even more important, to get their clients access into this world. And these are topics we accompany. So basically the entrance to this world and to participate in the refi ecosystem.
Thanks, Sandra. Let's go with Michael next.
Hi, I'm Michael. I'm engaged philanthropically at Combat Climate Change. We are a foundation that tries to bring technology and knowledge to companies to better have an understanding of their carbon print. Work-wise, I'm currently between two jobs, and I'm engaged in the digital asset management with a focus on tokenized carbon credits as well as cryptocurrencies.
Thanks. Tim, what about you?
Yeah, hi. My name is Tim. I'm one of the co-founders of Particular, and with Particular, we are building the first data platform and comparison tool for tokens related to regenerative finance. And starting from tokenized carbon, we provide quality ratings and in-depth reports. And in this regard, we are focusing especially on legal, security, and compliance aspects.
Thanks, Tim. Carsten?
Yeah, my name is Carsten Hermann. I'm based in Berlin and I'm a co-founder of Green Trade. My role at the company is at the intersection between product and tech. At Green Trade, our goal is to bring together corporate clients with carbon project developers to ultimately bring up a new solution to enable pre-funding for carbon project developers. That means we're tokenizing long-term offtake agreements with a project developer and issue carbon forward tokens. And those carbon forward tokens can later be used for offsetting at corporate clients. That means that we are providing a product that will be delivered in the future and is benefiting all new carbon projects.
Thanks everyone for the introduction. Very happy to have you and to talk about today's topic. So let me kick this off with starting from my perspective. Carbon markets experience significant growth and innovation through blockchain technology in the last year. So for example, we saw some two-way bridges emerging that can bring traditional registries on the blockchain. And we saw a vast sum of carbon tokens and NFTs being launched. And on the other hand, scaling the voluntary carbon market, the thing that we all talk about here, once again became one of the big talking points of like the global agenda through events like the COP27 and the WEF in Davos last month. So last week, McKinsey, for example, published the paper. It's called CO2 Removal Solutions, a Buyer's Perspective. And this study put a lot of emphasis on why we need transparency and integrity in the voluntary carbon market to reach a significant scale. Now, that would be something that I would think blockchain technology offers some solutions for, cutting out the middleman, saving and sending data in a tamper-proof way. But the thing that I do with all of these studies is I search the entire study for the words blockchain, distributed ledger technologies, and all of the other synonyms. And not once did this study, like so many others, mention blockchains or like distributed ledger technologies. So Sandra, I'm wondering, what is your take on the voluntary carbon market right now, especially when it comes to the intersection with the voluntary carbon market and blockchain technologies and the solutions that emerge from the combination?
Yeah, that's a really, really good question. So also the voluntary carbon market, so when we just remove the word blockchain, has experienced like a significant growth in the recent years. And this is because they have seen an increased demand from companies looking to demonstrate their commitment to sustainability and to reduce their carbon footprint, and as well from individuals looking to offset their personal emissions. And this has, on one side, led to a growing number of emission reduction projects, which is amazing, like renewable energy initiatives, forestry projects, etc. So these companies would actually generate carbon credits that can be sold then on the voluntary carbon market. But however, the VCM, I just call it like VCM, it's a little bit shorter, is still relatively small compared to the regulated market. But at least we face a lot of challenges there, including what you just mentioned, the lack of standardization, the lack of regulatory oversight, which can make it really difficult for companies and individuals to confidently assess the quality and the impact of the carbon credits they purchase. So basically the lack of transparency you mentioned. And on the other side, we also have the infrastructure of this market, which is still under development, which makes it difficult to trade carbon credits in a fast, efficient, and in a cost-effective manner. So, and these kind of problems will become more and more clear, and like the lack of standardization, of transparency, of efficiency, these are all problems which actually can potentially solve by using the blockchain technology. And I think this is also why we are seeing more and more startups coming from the blockchain space entering these kind of market and looking for how we can use blockchain to improve the infrastructure, to improve the whole system there. And I think this is really amazing. And I think we have the right panelists here to talk about, because I think all of you are really working into that space, how you can improve the transparency there or enhance the transparency to make it more efficient, to make it more open up for maybe more individual side, not only big institutional players who can take a role on the market. So I think we have a good starting point, but we need to be careful here that the market is not only used to, I don't know, buy your free pass for obligation or the greenwashing part, which is a huge problem there.
Before I let Carsten and Tim chime in on this, because I know they are building solutions for this, Michael, you talked about like philanthropy and your way of making an impact on this world. I'm wondering why you are interested in the intersection of blockchain and sustainability, especially in the context of what Sandra just mentioned, that there are some solutions that blockchain technology might offer, but it's not like they're already there. So what is your take on this?
Well, the general gist is that all of these markets need financial investors to have an interest. Once they have an interest, you know, money flows and things can be developed. The problem for investors is that this market is to some extent still opaque in terms of pricing, the voluntary carbon market. A lot of these trades are bilaterally based. Often there's direct engagement with the end project, where then the credits are transferred. It is opaque at what price they're being transferred. It is opaque why at a certain price a certain carbon credit is being transferred compared to another. They all should be, you know, carbon metric tons, so should be the same price. No, if we assume that they've been properly certified. Now the certification itself is a problem. There's now a EU kind of project where they want to bring a standardization of the certification, which would help the industry. And once we have that, then I think the voluntary carbon market might to some extent merge with the compliance market that is much bigger. it is also a problem that these kind of childhood problems, let's say the crypto market is maybe in its teenage years, and this is still the young childhood market. And to bring it to a standard and to a size that is interesting for institutional investors, right? Currently, we are trading, what is it? The market size is probably 2-3 billion. That's very small, right? So it needs to grow to something more significant, unless it's only a purely buy and hold. Now, all of these things, they need to be settled. They need to be determined. And once you have determined that, then we can engage much better with the technology world to build actually the full chain, right, on chain, ideally, for this market. And I think these childhood problems still need some solving and some engagement, which is why we wanted to go with this foundation to engage with market players and develop common solutions, engage with regulatory offices around the globe, so that we can foster a positive change in that regard. But I think once we've settled those problems, and I think a lot of people from the regulatory side, from the tech side, are looking into it. Once we've settled this, then actually the blockchain or DLT application can really foster.
So the consultant in me says that we have the problem statements. Now let's get the solution pillars into this discussion. Tim, I'm wondering, with this problem statement in mind, what are you working on, and why do you think this is important for the industry?
Yeah, I guess it was a very good introduction from Sandra and from Michael, and I totally agree with all what they said. But I guess Michael made a good call. We have to differentiate between the classical market and the blockchain-based market. And it's pretty crazy to see that when we are looking at the classical markets with all his shortcomings, we nevertheless have a situation like we have something like an over demand. Yeah, so everybody's looking for high quality credits. And when we are looking in the blockchain space, we are seeing something like an oversupply. So nobody wants the blockchain-based credits. And I guess Michael made a good point. We need to involve the technology and maybe also put the technology a little bit behind the curtain, because blockchain should be an infrastructure, not the main topic. The main topic in this regard are the projects. And when we were looking at the space, and Sandra mentioned that there are more and more startups. Exactly, there are over 170 startups contributing to bringing carbon on blockchain. Yeah, and we are also seeing not only players in the voluntary carbon market, but also players like Kakubi, who are bringing carbon allowances on the blockchain with 9 lawyers and 10 compliance experts. Yeah, so we have to understand blockchain is the infrastructure, and it's very good infrastructure. But we are currently at the stage in the market where stakeholders or token issuers build new application on technology which isn't mature at all. So we are currently seeing self-repaying loans, staking opportunities, everything around DeFi applications, while we have the situation that nobody wants to buy those tokenized credits. Because when we are looking into the market, we see that it's mainly B2C. So 50% of the demand is only from private individuals, which is great because blockchain-based technology enables private individuals for the first time to buy carbon credits and offset their private footprint. But yeah, we have to be aware of the fact that only a blockchain ecosystem provider like Algorand or Polygon are currently using those credits, and maybe some pioneers out of the classical world like Bayer or Shopify. And I guess it's also lack of information why we cannot make the transition into this new space. And with particular, we are trying to provide those information base, and I guess it's highly needed because when you speak to Sandra, for example, she has a banking background, and you give her all the information about the projects which are freely available. I guess it would take 1 or 2 minutes and she would say, I don't invest in that. Yeah, so I guess we need to build some information on it. I guess we also have a good opportunity with the infrastructure. For example, putting metadata behind those tokens to be able at the first time monitoring those projects like other KPIs, for instance, the cash flow. But we have to do the groundwork. Yeah, and maybe if I'm allowed to, I would hand over to Carsten because he's currently building such solutions, and maybe he can give us some insights about how he and GreenTrade are trying to bring those transparencies and additional informations in the space.
Yeah, thanks, Tim. That's also very good connection point. But getting one step back, just using blockchain doesn't mean that overnight it becomes success and lots of money will flow into the carbon space. So there's maybe also misconception. So it doesn't bring so much to just repackage an existing credit and try to sell it as something new. We have seen this doesn't really work well. So what do we want to achieve? We want to generate more trust on the buyer side and also the investor side. This is possible by bringing in more transparency to make it publicly available to see how is the money actually flowing, what is really reaching the project developer. And on the other side, we also want to create immutable records of data. And I think there's the key point of using blockchain, that we can really create a new type of carbon credit. For example, we're working together with one project developer who is constantly, like on a daily basis, generating data based on IoT sensors about the project. And combining this with blockchain and using also some new standards which enable the use of like dynamic NFTs or dynamic tokens, we can build up a full record of the project and the carbon token and see how this is project actually, how is it being developing, how is also capturing of CO2 developing, under which conditions. So what I want to say, we need to create that real data sets that allow us to generate a carbon credit and prove that this carbon credit really makes an impact. And also when a corporate client is buying into it, they want to see also 2, 3, or 4 years later, how did this project develop? And maybe, it's possible to measure also biodiversity by analyzing all the sound frequencies in the forest. So it's possible that we say, okay, for this specific project, over a time frame of like 18 months, biodiversity has been increased by X%, all based on data. And when we start to use blockchain for this purpose, and not just to make use of the hype around blockchain and to try to just repackage it, then I think we can really benefit from it. And what we are seeing, and we have talked with really a big amount of corporate clients in the past few months, marketing it as a new type of carbon credit and blockchain-based transparency that's good. But this doesn't necessarily allow them the access to it. We still have to consider that we are also in our kind of a bubble. So we are talking to other people in this network who are really familiar and tech savvy. They understand blockchain, but for a corporate client, they have completely different purchasing processes. For them, it doesn't work. They will not just connect with a browser wallet. They still need to work in another way. And I think the challenge is here to start really to use the benefits on blockchain, not for the sake of using blockchain, but really for providing the benefit, and B, make it accessible to the world of corporate clients and also financial investors who have completely different factors which they need to be solved in order to invest into such a product. And we're working on this constantly. And I think, generating this data set and making it comparable is a good way. But maybe, Michael, I can hand over to you. What is, from your perspective, from an investor's perspective, what are the key points what you need to solve before you actually consider to put any money into this kind of project or this kind of asset?
Let me put it this way: if I needed to, I would be able to manage this market without the blockchain. That is entirely possible, right? We could have, but what is missing is the base structure. We don't have good registries. We don't have daily pricing. The exchanges don't have daily pricing really. There are batches of carbon credits trading in the interdealer broker market at huge spreads and so on and so forth. So these are key issues that first need solving, and in as much as and then we had the other issue with the tokenized world. The Toucan problem where basically Vera said, look, you burned credits and then tokenized them and retired them basically without our understanding. And so the engagement of the tech world, blockchain world, with the traditional world is a key thing. We need to work together, and that's why ECOTA is so important. That's why other foundations are so important. Now, once you have that, once you explain the full chain, then this is possible. Once you explain where a certain credit is being registered, how they can incorporate it in their daily markings of their investments, right? Which potentially they would need. Let's say you're corporate, and you know roughly what your carbon print is, and you want to buy a certain amount of voluntary carbon credits against it. You want to know at least where the pricing is. The pricing correct? What are the co-benefits that you talk about? Biodiversity, what are they worth actually, right? All of this transparency is not there. We know that it should have some value, right? Something that is purely tech-based in the voluntary carbon market versus something that has biodiversity as a co-benefit should have an extra premium on top of it, but how much, right? And these things, unless they are properly established, the institutional world will not come in. Now it's a chicken and egg problem. So we have to kind of try to find data, batches of data. That's what we want to do at the foundation. Try to find batches of data and show them how you can use them, how you can put a value to a certain co-benefit, for example, and then give comfort in investing in certain projects, in investing in certain carbon credits, right? And I think this is why such panels and disengagement and things we will do down the road are so important. It is really engaging all sides, the investing side as well as the generation side and the infrastructure in between. That's the key point.
This is also what the audience thinks, because we have so much questions coming in. So let me try. So I will not get to to all of them, but let me try to put in some of them. So Michael, and I want to get Sandra's perspective on this also because of her banking background. What role do you see governments and regulatory bodies play in the development and growth of the VCM? Perhaps potential classification of carbon credits as a security in the near future?
Yes, so it was a question to me, right?
Yeah, sure.
Exactly. So we start already with regulation. What is a voluntary carbon credit? Is it a commodity? Is it something else? Is it an extra asset class, right? We have some answers from various regulatory offices, but this is something that is not there. Within that regulation is how should they be certified, right? So there is, as I mentioned, this EU project that wants to bring a standardization of the certification in the EU. That's a key thing. Once we know that, we know how to verify it, and then we can do them traditionally or on chain. This is a key thing, and this is still missing, and it's something I hope that through ECOTA that we have more engagements with Brussels, for example, to foster that dialogue. Once you have that, then you can have some sort of heterogeneity. You will understand why a certain credit is priced in a certain way, because you understand how it was verified, what are the co-benefits and what is their worth. Out of that, then you can develop a market structure, right? What is my current, my spot price, what's my forward price, et cetera, et cetera. And we can engage with the various exchanges, such as air carbon, expensive, et cetera, to have a proper pricing of all of these projects, right? For the various vintages. And we understand why certain vintages are cheaper than others and so on and so forth. And I think this is essentially key. So this is something where the market is to some extent also waiting for regulatory offices to give clarity in a certain way, as the BaFin has done in Germany for the crypto market. Maybe to some extent we had from the industry we had questions around it. We didn't like some of the regulation, but there was regulation and there was transparency and clarity. This is how you do it, how you should be doing it. This is how we see it, how we will judge your projects. And this is to some extent still missing, right? It's still an infant, as I said, market, right? Very young, but once they bring this, the demand is so big that it should thrive, but we have to wait for this clarity, and it's sometimes a little bit cumbersome to engage with regulatory offices to understand, for example, where do you classify it, right? What kind of licenses should we have if we want to build an investment industry around it?
Sandra, what's your perspective on this?
Yeah, so especially from the governance point of view. And this is actually, no matter what we are talking about in the crypto space, everything that's blockchain based, we need one point in time access to it. And it will be always one point centralized access. And what we see, and this is what Carsten mentioned actually, I don't think we will get the German Mittelstand to open up a browser-based wallet to invest in blockchain-based carbon credits. Maybe I'm wrong, but I don't think so. So what we need is a trustworthy partner where these kind of institutional investors, like the industry, can come and in a safe way have access to these kind of investments, because I think we can only scale in that way. So, and this is what we at Intas are doing. We accompany exactly this development. So we are helping the financial industry to building up this access. And it's no matter what you want to invest, it's not only about crypto, it's not only about investing in BTC, it's also investing in blockchain-based carbon credits. It's also in investing in carbon credits forwards or in crypto securities. You always need access to blockchain, and this is through a wallet. So you need this kind of infrastructure. So I think regulated institutions like banks are really playing an important role here, because this is the starting point. And we needed to, everything what Michael mentioned is completely right and also completely important, but we need to start somewhere, and this starting point is not there yet. So, and I think this is really something we need to focus on to develop that. I know that it's not a easy thing to do, but I think this will be the point where we really can start to evolve the market.
Let's take another question from the audience. And Tim, this is one for you, and Carsten, also interested in your perspective on this. Jakob asks, verification of the credits is a major issue. How would blockchain help here? Also in regards of garbage in, garbage out. Okay, this is a wording, but I know we all know where Jakob is coming from. So we talked about double spending, and Michael mentioned the Vera incident. So what is your take on this question?
Yeah, maybe the garbage in, garbage out phrase is not that inaccurate in this context. Maybe to add only one just quick comment to what Michael and Sandra said. I guess this has two dimensions. The first is the credit, the second is the token. And the token comes with different implications, and the technical design also plays an important role for that. And you can design a tokenized credit as an NFT, you can design it as an ERC20 token, and you have different rights with the technological design. And I guess that's also the question, or maybe it can be a puzzle piece in the question you've asked, Max, because when we are looking at those different projects who are bringing credits on chain, Michael mentioned the one-way bridge from Toucan, we are seeing two-way bridges, for instance, from Thallo. I guess there is a broad range of different services, and of course there are different verification tools to do so. But I guess one important risk, what I see in the market in regard to verification tools, are crypto native credits. We didn't mention that yet. So that are credits which are emerging only on the blockchain. So there's no equivalent in the classical market, and they have their own methodology, they have their own standards, they have their own implications, and also their own processes of verification. And we are seeing a market, Michael mentioned it, the classical part isn't regulated at all, but we are putting technology on it. It's getting more and more complicated, and more data does not mean good data. And data to verify something does not mean that they are accurate, because blockchain, as I mentioned before, is only an infrastructure. So the data you put on the blockchain are immutable, but you have to be sure that the data you've put on are right. So we have to also focus to build incentives for those people who are onboarding those credits on the blockchain, or build them natively on the blockchain, to establish some verification processes which are aligned in one case with the standards, but in another case also with logic. Because when I look at the market, there are different use cases which aren't logical at all, and we're trying to make the second step before the first step. And I guess that's a shame, because we are building hurdles for the institutional adoption in this regard.
That's actually a key point, if I can chime in that out of the last year, 2022, right, with FTX and stable coins and the Luna going down and so on, there's a hands-off approach to anything that is DLT and blockchain, right? And it's actually sad, because the technology did whatever technology did. It didn't do anything wrong. It did what it needed to do. It was the actors that were engaging in a not a nice way, let's say. And But the issue here is how would we expect institutional clients to engage with the blockchain world if already the underlying classical market is kind of cumbersome to understand? So especially for purely crypto and completely blockchain-based carbon credits that are not verified by Vera or certified by Vera, etc., etc. Here especially, we would need to engage with the regulatory officers, ideally with Brussels and the EU, so as to have a clear rule book how such a credit should be tracked and followed if it's purely tech-based. I think the technology is right. It's just that we have to get these people on board to support us. And once they understood how the technology works, because for them, they're still in the classical world in that somebody goes there, checks the project, visits it every 3 months and so on and so forth, says, okay, I estimated at so and so many carbon tons. This is the formula I use. And they say, look, I understand this formula, it's fine. Now you come with IoT, what is this? Right? We have sensors, what kind of sensors, right? And so we have to go really slow, step by step, get them on board. Once they're on board, then institutions will follow, because they need the assurance that the regulatory office is fine with it.
Carsten, we talked about a pillar of your business model. I'm interested in your opinion on this.
Yeah, I think the whole point about what is the risk, who is taking the risk, and how we can avoid or how can we decrease the risk for any type of buyer, if it's an investor, also a corporate client. I think we're facing the same risks. And when it comes to verification to time, it's still the possession that verification happens one time. Then the project's been certified and that's it. And I think we need to detach a little bit from the thought that the verification is only a one-time event. Verification, validation, reporting needs to happen like continuously. And that's something I mentioned earlier briefly, that by collecting real data from the ground, and this can be from various sources, like I said, IoT sensors or satellite images are some possible sources of information. When this is collected continuously and recorded and also analyzed and presented in a way that's easy to consume. I mean, for sure, no one will dive into a 300-page long automated report with data. So we need to also extract what is important for them. And there, Michael, I can just confirm we need some guideline, because when we talk with all the corporate clients, but also with the project developers, everyone has a different understanding of what is important, which data is actually important to fail a decision. So when we have there like a baseline of what we need to collect, I think then the next step will be quite much possible to collect exactly this data and present it in an easy to consumable way. And then verification is nothing that happens only one time. Verification is something that happens like all the time. And we can really watch a project growing and evolving, and we can also see when the project, for example, the forest is burning down or whatever, or the project, the implementation of a new agricultural method is failing. So we can really see how is the progress, even good or bad, and this will bring really then transparency and trust. So therefore, my statement is here really verification is something that needs to be ongoing, not only one time.
Okay. And I want to tie this back to a question that Renzo asked in the beginning of the panel. The question was, could you please share what is the most tangible and significant example that show the impact of carbon registries on the blockchain? And I think this ties into, okay, why do we need blockchain at all? Why don't we just stick with like normal registries and normal certificates? Maybe Carsten, you can take this away and we'll have a group.
That's a very good point, and I'm thinking about this a lot as well. I mean, we currently have the bottlenecks in the form of the central registries, and we see it takes really long until they start to adopt new methodologies and until the issue like with tokenizing credits is being solved. So everything is really going on forward pretty slowly. And when we talk about blockchain, it means we talk about a decentralized way of doing it. And there, I really like to mention one of the possible models like open forest protocols doing it. So basically you can have verifiers everywhere in the world, and you can just assign them a job or give them like a reward in terms of future credits or monetary reward, whatever. And this kind of verification can happen independent from one specific bottleneck. So these verification actions happen like everywhere. And when we have a guideline, which points have to be fulfilled to be like a certified project, I mean, what is the certification process? Some people are looking on the data that was collected and then decide, okay, that's reliable, that's legit or not. I think when we have data, then it's easy also to see, okay, does this data meet a certain threshold or a certain goal? And then if all of them are approved, it's being certified. So this is possible to do in an automated way. And we don't need to wait for some individual people to look at it and wait for it. And maybe they even don't understand it. We don't know. So yeah, therefore, blockchain would really make it much more easier and much more fast to actually verify and certify and release carbon credits.
And also to gather data and put it in a database, Tim?
Yeah, I guess it's pretty hard. And I guess that's one of our toughest challenges at the moment at particular, because as I mentioned before, we make the second step before the first step. And without the standardization, without the classification, we are seeing various projects with their own USP, with their own approach, with their own methodology, with their own verification process. And it's pretty hard to build something like a database when you have individual classifications for nearly 500 projects, I guess. Yeah, so I guess we have to do the groundwork, not only from a regulatory perspective, but also from a technical perspective. And I totally agree with Carsten. We need something like standards in the classical world, because recently I was aware of the fact that if, for example, a forest and a reforestation project gets burned, the project developer is not obligated to report this immediately. So you can wait for weeks, for months, and you do not know that the forest isn't there anymore. So I guess projects like Open Forest Protocol are great because they engage normal people to contribute themselves to a positive change. But we have to do it in a coordinated way, I would say, because as I said, more data is not better data, maybe to say it in that way, because we are seeing lots of projects which has a lot of data, but not in a structured way. And it's pretty hard for an investor to get the deep dive into the projects and see what the issue is seeing and understand what they are doing and understand the mechanism behind it. And I guess there's also a lack of incentives to use those open source protocols, because when we're looking at the transaction data or the usage data of those protocols, I'm not sure, Carsten, maybe you know it, how many people actually contribute to those protocols and go into the forest and make the nodes. I guess
very few.
100?
Yeah.
50? So that's no positive change. Yeah. Because you can do it in one forest, but not in 20, 50, 100. Yeah, and I guess we have to take the people with us who are living there, for instance, in South America, who have a direct impact from those projects. And I'm not sure at the moment if every project is wanted at the local or for the local community or by the local community. And I guess this would be also a great use case to incentivize the local people to help to make a better change right at the project. And I guess there are some important services, but we have to use it. And before we can use it, we have to define standards, dimensions. And I guess this is beginning from the categorization. What is a tokenized credit? What is a crypto native credit? What is a carbon NFT? And you have to start there.
And maybe to add as a little example, when blockchain smart contracts come into play, when you see the example from Tim about the forest, so for sure it doesn't make sense to issue all the credits for a forest project right from the beginning. So there are always several issuances over several years. And once, let's say it was detected by a sensor that the forest or that a certain amount of trees is not there anymore, there can be an automated smart contract interaction and no more credits will be issued. So there can be already today an option to stop that and to make it a little bit better. And then the more of this kind of mechanisms or rules we can establish, the better the quality of these projects and credits will be. I mean, then one day we don't need to worry anymore. Do I buy now a credit from a ghost project? Is it really there? Was there a hotel built by this time in this area or whatever? So therefore, yeah, it only helps when we integrate technology. And there I see that let's say the traditional carbon world and the new Web3 based carbon world, there's like a huge gap between those two because they work in a completely different way. And if you talk to professional traders of commodities who also trade like with carbon commodities, and if you talk with corporate buyers who buy spot credits or with corporate buyers who buy forward credits, they are all really far away from each other. And harmonization or standardization is there definitely a way. I do not see so much progress, to be honest, when it comes to the standardization of data schemes or different kind of token assets. I think, Tim, it's something you also have on your agenda to work on this. But yeah, I can only remember here the building blocks of this new kind of market, which we all work on, and everyone talks about the carbon market and so on, the voluntary carbon market. We are still working on the building blocks which are on the ground for it. So sometimes we should think about, okay, which is the, let's say, smallest solvable problem we can solve right now, instead of trying to solve the problem that will come up in 5 or 6 years.
This ties into one question that we had from the chat. Cartep wrote that only a minority of credits are, projects are based in the EU, but most of the credits are purchased from within the EU. And the question is, so what will tip the scale towards locality of credits? And I want to tie this, like a bit rephrase this and pose this one to Sandra. I'm wondering, do institutions like banks, do they really deeply care about what underlying technology they are buying and where the project finally is originated in? Do they care if it's a German forest or South African forest, for example?
That's a really good question. I think in case of technology, they really care about blockchain. So I think this is really a new thing for them, because before we don't really, I don't think institutions care about the internet infrastructure, right? So not even sure if, so I would not be able to explain you the internet infrastructure, for example, into detail. But we don't really care about it. We know how it works. So for blockchain, it's something different. When we hear, okay, it's a blockchain-based market, then everybody thinks about crypto, everybody thinks about BTC, and now everybody thinks about FTX. It's still there, but we're getting there. You know, it's developing. So they care about what technology the market is based on, especially when it comes to blockchain. So, and the thing is, why do they care? Because they know they need to change their own infrastructure. They need to, at least they need to plug the new infrastructure into their system, and this is a huge project. So they really care about that. If they care about a project based in Europe or outside Europe, I think it depends where it is. So, and especially when it comes to like sustainability projects, I think they are less concerned when it comes to investing in these kind of projects. But what I mean with less concerned is it is different when we invest in a normal company somewhere or in a sustainability project. You know what I mean? It's of course you have other ways of assess these kind of projects, but at the very end, I don't think they really make a difference between normal investments or investments in these kind of projects. It's just the way they assess it. So, but of course, the technology makes the difference for them because they need to get on the infrastructure and need to change it, and they are still afraid of what's happening there. And I think this is really the educational part which is coming into place here right now. Like everywhere where we use or talk about blockchain, it's always about education and really differentiation between the different words of using blockchain as infrastructure. And I'm really happy that we mentioned it so often in this panel, that we are talking about blockchain as infrastructure and not about crypto or token so much. So because this is basically what it is. We just use it as infrastructure. And if it's the internet infrastructure, or we develop the internet infrastructure and include the blockchain for the internet, for example, it doesn't matter at the very end. It's nothing to do with speculation or something. It's just infrastructure. And basically, it's also back office infrastructure, so market infrastructure. So yeah, they care, but I think they're also willing to learn about it. So that's what we experience, at least.
And I know we are running out of time, but I want to give this one back to Michael, and then Carsten, you can chime in, and then we'll. I know we can talk for hours about this. 45 minutes was too short of a time. I get it. Maybe next time we'll do like 60 minutes. But Michael, you talked about like European Union standardization, for example. You talked about the BaFin in Germany. We have some examples on this continent how it can work. And I mean, ECOTA has Europe in its name too. So maybe you can give us the bull case for how this can, all of this, like talks about integrity and transparency, can be something that Europe can emerge from stronger than before.
No, absolutely. So I think one example we have is Singapore, where they have a carbon-related tax, and you can offset it with carbon credits, right? So that is something where I could see the regulator making a difference, similar to what they have with the MiCA, the Markets in Crypto Assets Regulation. They could bring about a kind of voluntary carbon market regulation and standardization of verification, et cetera, and what you can pledge against your, let's say, your carbon print or your carbon taxes, right? And I think this is a key thing. Now, on the investor side, there is still it's not homogeneous, and it's very subjective how they select the project. So some say, look, I went to Sierra Leone a couple of times. I like the country, so I only want credits from there. Then another one says, I like forests. They're green and smell nice, so I only want nature-based. And the next one, there's some big tech companies. They only want tech-based carbon capture, and all of this necessitates a certain classification of them, as well as a way how we can make it accessible to individual investors for the individual markets, and where they also know and have certainties from a regulatory perspective that they can pledge them against whatever their carbon, be it on the institutional level or the private level. And I think this is a key point. This is what I meant with we need a certain harmonization within the EU of what the taxes should be and how we can offset them. And once we have that in place, I think this market will thrive. And I think it could be on chain, it could be organized in a traditional way. But I think once we understand how these two worlds, the print, the generation of the credits, the trading of the credits, all of that on chains, right? So I've de-risked my settlement because I know my transaction will be sure, because I can check my back office and know that those credits are free for delivery, for example, right? It's not only the verification process, it's also the trading aspect that can all be put together on that infrastructure. And I think this is the key thing that we have to work with ECOTA, to get a certain harmonization of the licenses for investors, for example, for banks who can trade it, right? Sometimes, I know that some banks, they let it fly under their commodity license, which, is probably not the right way to do it, and so on and so forth, right? And once we have that, institutionals are fine, private investors are fine, then we can really build it. And I think this is the key work over the next one to 2 years.
Lots of homework to do for us as ECOTA. Carsten, do you want to add anything?
Yeah, maybe just one thing regarding the term blockchain. We could also just say, hey, it's a public database. So, as soon as you bring in blockchain, then you have some mistrust when it comes to corporate clients. And we don't necessarily to put this so much in the foreground, because it's not important, actually. It's important what's the result from this. That's one thing. And another thing to what Michael said, or something completely in addition to this, I think it's also very beneficial if we maybe get away from the thought that the asset, and I mean this talk is about carbon as an asset class, that the asset is this 1 ton of carbon or the specific amount of tons of carbon. What is actually the asset where we invest in? It's the environment. The asset is like in new jobs, in new infrastructure, in healthy oceans, in healthy nature, in our world. I mean, it's the basis for a flourishing economy. So the asset is actually what we all live from. And that's what I don't understand when we always talk about these topics, that the question is always, okay, how can we convince like investors or corporate clients to invest into it, and why is this a new asset? it's all the time a new asset. I mean, we are living from it. And if we don't invest into it, the asset will just diminish, it will just go away, and we don't have any basis anymore to push our economy and to have also flourishing businesses working. And therefore, maybe it's a good start for the end as well, to think about what's the actual asset we're investing in. And if I think about it, it's no question that it absolutely makes sense to invest in it. We just need to provide a secure way of doing it. And then money can flow and we can really build up all these projects and take all the benefits.
Yeah. That was basically the perfect ending statement, but I'm going to ruin it because I want to do one last quick round of one sentence. I'm interested in you. I mean, we have a couple of perspectives here, right? We have the builders, we have the consultancies, we have the philanthropists with a more like broad view on it. So I would be interested. We have 11 more months in this year. So what is the key issue that we can work on in 2023 to actually make? All right, so Carsten, you you already mentioned it. So I wanted to say, to make this a new asset class, all right, it's already an asset class. Let's put it like this, to make it a more efficient asset class. Let's put it like this. And let's start with you, Carsten.
The goal is here for this year, I think, to lay the foundation, to define which measurements, which factors, which values are important in order to rate this as a good project, or really to understand if this has impact or not. So to have a baseline where we compare different kind of projects and methodologies to.
All right. What about you, Tim?
Yeah, I guess there are various factors I would love to see, but one of the most important factors from my side would be that we are seeing the technology moving more behind the curtain, and that we are speaking from a digitized carbon market and not from a blockchain-based carbon market, and maybe to work on the awareness of the classical economy, to use those infrastructures to build something great and to be transparent, traceable, and liquid in a very good manner.
Michael?
Yeah, I think the key thing is a regulatory clarity, and then investment into this space can follow on a more sustained level. Otherwise, I think institutionals will remain mostly with the compliance market, so the allowance market, and that's and we want to actually move away from that towards more the project based, the voluntary market. And there's twofold basically. We need clarity how to structure the funds. We need clarity how to structure an index, for example, that would track the overall market. All of those are things that we are working on. And also from the regulator themselves, clarity on what projects can be bought into them. But then on the technology side, they could be on wallets, they could be traditionally registered with Vera and a normal depot bank type system. You know, all of that can work. Of course, we hope that that we can move it all onto the on-chain, because it's faster, it's more clear, it's more transparent, it's more direct.
And Sandra?
I would love to see more institutions building access to these kind of asset classes, because as I said 1,000 times today, it's a really important thing to have the secure access through a trustworthy partner, so we can really reach the institutions, the corporate clients, the individuals in a secure way. So
all right, then Sandra, Michael, Tim, Carsten, thank you very much for taking the time to join today's panel, even with the overtime. And from the amount of questions that we got and the amount of overtime that we took, I see that there is a big demand maybe to do this a second time, in a like different setting, maybe with a different question. But thank you very much for taking the time. Thank you in the audience for taking the time and for being so active in the chat. I'm sorry that I could like only get to like 10% of your questions, but it's hard. It's hard if there are so many flying in. So thank you very much for being so active. And we hope to see you on one of our next panels. And you can follow us on all our socials, LinkedIn, Twitter, to keep up with all of our panels. And we would love to see you in one of our next events. So thank you very much, guys. See you around. Bye-bye.
Thank you, Max.
Thanks a lot.
Thank you.
thank
Bye-bye.
you. Bye.